Welcome to another StockOdds podcast. This is Odds and Ends with Rob Friesen and Dave Singh. Good evening, Rob. How's everything?
Hey, not too bad. I just had company leave, so I'm free to do this. Sorry we're so late, audience. Apologize for that. You'll have to work through the wee hours of the morning to get ready for trading tomorrow.
As do we. Well, we're just trying to get our bearings here as to what the week could be like coming ahead here. This is the last week of the month, and I know the seasonality almanac usually references the final 5 days of the month. And this just happens to be an entire full week, Monday through Friday, the last 5 days of the month. And I've been llooking at the almanac to see any trends there. And I know you've been looking at certain sectors as well with some of your research. But just want to get your take on what you think about the markets starting tomorrow.
Hey, before I forget, we did post a blog for the last trading day of October. So you can go to our blog at mystockodds.com/blog. And we talk about hot stocks for the last trading day of the month. And it's a pretty good article. So I'll give you some flavor of using seasonality. So we'll be rolling over to that with Dave here momentarily. First, let me look at where things are at. So right now, we did spike to a high there on Friday on the Dow and pulled back a little bit. Now the Dow has gotten slightly above that sort of August high that it set, right? And so it's come back kind of the strongest of the other markets like the Dow, S&P, NASDAQ, and Russell. So the Dow's kind of had that leadership, right? And it's holding up okay right now. And we'll see how that is pre-market. The S&P also, holding pretty good. Did spike up there on Friday to test the high. Never really got much above it. Just kind of like tried to poke through. And it's holding up okay right now. NASDAQ 100, it never made it back to that high that was really set at the end of August, beginning of September. It never really made it back there. So it was kind of one of the latter ones to push up there. And now it's been a lagger to get back to that area. So there's still some room on the NASDAQ 100, and it rolled over on the index from the 15,500 area, and it pulled back, and we're sitting at 15,335. So that one still has more room to the upside before it touches the August high, September high there. And then the Russell has gotten back to the top of its trading range over the last 2 months. And it still has some room to go to get back to highs that it set back in March, and then lower highs that it set in June and July. So Russell has been kind of the weaker in the sense that it hasn't had that big rally, but the rally for Russell really started last November when it performed, insanely from really November 1st all the way to February when it, first popped up there, and then March it made another new high. But that move all the way to February was quite astounding. And that's when you also got, into January, February, you got some of those short squeezes that happened on small cap stuff. The SPACs were going crazy. It's a lot of speculation, a lot of froth in the market. And since that point, the Russell's been sideways all the way through. And if it does this again in November like it did last year, that's going to be quite remarkable. It'll be building. Actually, there's something to that, Dave. When something channels for a long ways sideways, it gets this sort of built up energy. And it can really explode out of a channel to the upside, or the other way. It could falter to the downside. But what I've seen in my life regarding trading is that when something has lifted, goes into a channel and doesn't come back down and holds there for a long period of time, the break is usually to the upside. So that's what I would be anticipating, is a repeat of November last year, where this November we really start going with the Russell. So we got to pay attention to that, because you don't want to get run over, and you certainly want to benefit from it if you can.
Well, isn't the Dow kind of being the strongest of the indices kind of a precursor to that? It's kind of like big cap defensive move. People are flooding into the big names.
Yeah, well, other than the Nasdaq 100, which has been a little bit softer, right, than the Dow. So there has been this flight to value. There has been the flight to the cyclical. It has been a flight to some of the dividend-paying stuff. And it's probably just because the market got so frothy, and then we had some risk with the government crap. I shouldn't say crap, but the government's stuff that's been going on. It's meant that we were a little bit at risk, and so some of these companies that don't have any profits, may not go the way that they say, like, hey, by the year 2034, we're going to be profitable. It's still a long way down. So, I mean, it went to there was a flight to quality, no question. The same thing happened with the dollar. We had a flight in the dollar. Now it's starting to weaken off of its highs as well. And because things are priced in US dollars, when a dollar pulls back, they should actually go up, like commodities should go up, and even the stock market should actually go up. It had been tracking together for a while, right? Anyway, what do you got on your radar regarding next week? We got 5 days seasonality, the last 5 trading days of the month, last 3.
Yeah. So I was trying to see which sectors might do better than the spider, and a couple of them popped up. Financials are expected to outperform the overall market, and also technology. And some underperformers are expected to be oil and gold. But even tonight, gold's making a high there. It's gone up again another percentage. So it's kind of conflicting between what seasonality would dictate and then what's happening in the macro, especially with oil. Technology and financials, it may still be strong, but the conflicting signal would be oil.
Okay. Well, with the financials, we have to pay attention to TLT, right?
Mm-hmm.
And it, was moving higher. So wouldn't that put a stress on financials to go lower?
Yeah, it's
the opposite,
interest rates. Right? Interest rates go up, helps financials. Interest rates come down, it hurts them. So I mean, they move in lockstep.
Right, and so the TLT had pushed down. That's a 20-year bond, and so financials had been pretty strong for a while, and so we're kind of on the back side of that. I'm just going to pull up XLF, which obviously there's a lot of things in XLF. But it's been moving up to new highs as well. I mean, it's been doing pretty good recently. Mm-hmm. So, but I mean, again, financials have all kinds of different. You have capital markets, you have insurers, and things like that. So, so what else is on? What other groups are strong for this week or weak for this week?
Well, some of the biotechs could be a little bit weaker as well. So IBB, XBI, so maybe some of your smaller biotech companies would be weaker. And especially if the interest rates continue to go higher as well, that's going to benefit financials, but hurt things like technology and biotech, companies that need to grow, that need to borrow money. It's going to become more expensive for them to borrow money and then use that money to grow. So we can see a little bit of pressure on the smaller biotechs and growth healthcare.
So for the foreseeable future here, we still have the inflation backdrop. This is a significant theme. Mm-hmm. I mean, Yellen alluded to that as well, that, maybe mid 2022 before we see any, light at the end of the tunnel here, but even then could be longer, right?
And I don't see how it can be transitory, especially with wages. I mean, in my town, there are signs everywhere, $16 an hour, $20 an hour, trying to get labor in there. And they still can't find the labor, right? So once you start paying people more, it's pretty hard to take that back. And so I'm really suspect about this whole transitory argument.
Yeah. Well, I mean, inflation has been a lot about the velocity of money. So what happens is if people have, been able to save and they want to get out and spend it, and there's more money, chasing fewer goods, So I don't like. I think we have a lot of goods. I mean, the goods are all bottlenecked though right now, but they will push through, and we'll have that back to that sort of deflationary aspect of an abundance of goods. Technology should be deflationary, but it's this bottleneck for like services and discretionary areas that you could see these inflationary pressures. So I think I look at it two ways. I think that the Fed is sort of being a little bit more like optimistic, and I think it's going to catch them a little bit. But at the same time, I do agree with them that in some of these areas, these bottlenecks will push through. So, it's kind of like giving birth, right?
Mm-hmm.
Well, not that you and I have experienced that, but you know what I mean. It's like it will come out the other end. So in that sense, it'll be transitory. But before then, there's a lot of pain, and also the public, groceries have gone up, meat has gone up, like. Even myself, I mean, it's like the last time I was at Costco, I actually chose the sirloin rather than, the other better cuts because, the prices jumped a lot, right? And it's like,
10, 20%.
I just can't pay that. But anyway, I can always doctor up the meat pretty good, so it tastes just the same. I'm not a Kobe steak eater myself, but anyway, the thing is that I think the Feds are right and wrong, if I can say it that way. I think that in some areas you almost have to break it down, kind of industry by industry, and not sort of just say the brushstroke of inflation is either long duration or transient. I don't think you can say it because I think you got to go industry by industry, and say what is the real impact here, like if like kind of how oil is in a bit of a problem right now because the supply chains got disrupted. We started to get more ESG. And portfolio managers are significantly underweighted or don't have it at all. Everybody's scrambling. And so, you get this significant rise in oil prices. And I don't think it's over yet. And this is what we need to bring to our audiences is that, you can have very good statistical data. You can have highly quantitative. You can put even technicals, things like that. And you can have a macro theme that runs over that, right? It's like we should be going down at this time of year for oil, but we're not. Why? There's a fundamental reason why that has now taken over the more, quantitative, boring approach. And there's nothing wrong with it. You're going to experience it your whole life, where, what you do 80% of the time will be at risk 20% of the time, right? So you have your quantitative stuff, and in most cases everything's working, but there's these forces. So make an adjustment, allow for it, don't get stubborn. I wrote an article about how seasonal oil was between July and November, December. Well, seasonally we should be weaker, but we're not, because of these forces. Next year I might be right again. I could be wrong this year. Next year I might be right. But it's just seasonal data. That's all it is, right? So any thoughts in closing here?
No, it just seems like there's a little undercurrent of risk on in the background here, especially with technology expected to outperform a little bit. We have Bitcoin kind of near high levels. Things like Tesla are rallying again, even some of the ARK funds. So there's like an appetite for risk, but I mean, seasonality wise, we're expected to have kind of muted last 5 days, but then we could set up for a big rally come November, like you're saying, a repeat of last November. Maybe the small caps really start taking off and then drives the entire market. So just the futures aren't doing much right now, but I think there's a little
Well,
undercurrent of
yeah.
risk on, especially in technology.
There seems to be a real appetite for. I mean, the market had corrected a bit, and it couldn't help itself
Hmm.
to get back to where it started, right? Like it was tripping over itself to get back where it started. And it just seems like it wants to go higher, and there's nothing wrong with that. And November is the beginning of the best 6 months of the year, and so we probably won't have an upset until midterms, right? And if China was going to invade Taiwan, they would probably want to do it before the midterms. If that's going to happen at all. I mean, that could be a very disruptive event to the market.
Hmm.
So we fasten your seatbelts. We're going into the best 6 months of the year, and market will probably want to go higher. But you never know what the surprises are. That's why they call them surprises.
That's why they're black swans.
Yeah, yeah. If the white ones we can kind of get an idea of, gray ones are somewhat hard to figure out, but black ones you're totally surprises, right? All right, my friend. Thank you, and have yourself a good rest, and we'll catch you in the morning.
Thanks, Rob. Bye bye.